All right, welcome everyone. The crypto market today feels like a total battleground of contradictions. On one hand, we're seeing some of the biggest institutional moves ever. But on the other hand, it's clashing head-on with this wall of extreme fear. So what gives? Let's dive in and figure it out.
Okay, so Bitcoin is just kind of hanging out around $108,000. But the market itself, it's being pulled in two totally opposite directions. You've got this massive institutional progress happening. The Fed opening doors, the ETF wave getting bigger, and then, bam, you've got this crippling market fear, driven by that extreme fear index and a ton of macro uncertainty. Let's break down what's really driving each of these huge forces.
And when I say fear, I am not kidding. Look at this. The sentiment is just at rock bottom. The Fear and Greed Index is flashing a 25. That is deep in extreme fear territory, signaling widespread panic among investors. And reading this low, well, it forces us to ask a really critical question.
Is this a massive warning sign telling us to run for the hills? Or is this one of those historic buying opportunities people talk about for years? To even begin to answer that, we have to understand these two powerful forces. And we're going to start with the institutional giants, because honestly, they seem to be completely ignoring all this panic.
All right, let's kick things off with the institutional green light. We're going to look at why big money is moving in, despite all the fear. And the first piece of news, it comes straight from the heart of the U.S. financial system. And trust me, it is a big one. The Fed will embrace disruption. Just let that sink in for a second. That's a direct quote from Christopher J. Waller, a Federal Reserve governor. And it's not just talk. This comes as Governor Waller is proposing a brand new framework to give regulated crypto companies direct access to the Fed's core payment channels.
So what is this thing? They're calling it a skinny master account. And listen, this isn't just some small tweak or minor update. This is basically a proposal for a direct highway, a superhighway for crypto firms right into the core of the U.S. financial system. We're talking about a deep structural integration into mainstream finance. And you know what? This institutional embrace is already showing up in the data.
Check this out. After 4 straight days of money flowing out, spot Bitcoin ETFs just saw a massive $618.9 million net inflow. Just look at the chart. That is a huge reversal. It's a super strong signal that while a lot of retail investors are panicking, the big institutions are seeing this as a buying opportunity. They're accumulating, plain and simple.
And hey, this isn't just a Bitcoin story anymore. The institutional appetite is getting way bigger. What we're seeing here are the first signs of a full-blown altcoin ETF wave. Get this, Hong Kong just approved the first ever spot Solana ETF. That's huge. And right here in the US, ProShares has filed for an index ETF that tracks a whole basket of goodies: Bitcoin, Ethereum, XRP, and yes, Solana again. So, okay, if all this institutional news is so great, then where in the world is all this fear coming from?
Well, let's flip over to the other side of this tug of war. Part 2, the macro wall of worry. Let's dig into the sources of this extreme fear that's just dominating the market right now.
So what's got everyone so spooked? Well, there are a couple of big storm clouds on the horizon. Geopolitically, there's a lot of uncertainty because that big planned meeting between President Trump and President Xi, it looks like it might not even happen. And then back home, there are these rising concerns about a potential U.S. government shutdown. Both of these things create what we call a risk-off environment. Basically, investors get scared and they start dumping riskier assets.
And you can see the effect of this fear crystal clear right here. Bitcoin's dominance, that's its share of the total crypto market, has shot up to over 59%. It's a classic flight to safety. When people get nervous, capital gets sucked out of the smaller, riskier altcoins and flows right into the perceived safety of Bitcoin.
So all this fear creates a really clear split in the market, a tale of two cities, if you will. The current winners, the ones with strong institutional backing. We're talking Bitcoin, Solana, XRP, and we're also seeing a lot of strength in that DeFi sector that's DeFi plus AI. But on the flip side, the losers, well, it's the more speculative stuff. Your small cap altcoins, your meme coins, they're the ones getting hit hard. So the million-dollar question is, how do you navigate a market like this?
All right, part 3, strategy in extreme fear. In a market that's this divided, you absolutely need a disciplined approach to handle this kind of volatility. So the analysis points to a pretty clear 3-step hard-nosed strategy. Step 1, focus on the assets that have those clear institutional catalysts we talked about, like SOL and XRP. They've got a built-in tailwind.
Step 2, be smart about leverage. Seriously, avoid using too much of it. It can wipe you out in a volatile market like this. And Step 3, and this is crucial, use strict stop-loss orders. Think of them as your safety net. They help you manage your downside risk and protect your capital.
Okay, so this whole battle, this tug-of-war between the big institutions and the macro fear, it's really coming to a head. So for part 4, let's look at what to watch next. What are the key events that could finally decide this thing? Tomorrow, October 23rd, is going to be a big day. Keep your eyes on 3 things. First, any news about that U.S. government shutdown. If they announce a resolution, that could take a huge chunk of fear out of the market. Second, the daily ETF flow data. We need to see if that positive momentum we saw can actually continue. And third, any news about the Genius Act. Any progress on stablecoin regulation would be yet another huge green light for the big players.
So what's the big takeaway here? The market is at this absolutely critical turning point. The real opportunity, it seems, is whether the market can just look past all this short-term macro noise and start pricing in the huge long-term structural adoption that's happening right under our noses. So the big question is this: can the sheer force of institutional adoption overcome the powerful drag of all this macro fear? What do you think? Will the Fed news and that new Solana ETF be enough to push us out of this rut? Let me know what you think down in the comments. Talk to you next time.